How do you?
How you doing, Matt? You okay over there?
Yeah, but all kinds of stuff keeps popping up on my screen, and I don't want it. So I just want to see all you guys, but I'm seeing everything else.
I just see you, Greg, and myself. So if you guys don't mind, you can see me okay. I changed the lighting in here a little bit. How's that look?
Top notch, baby.
Do I look fabulous?
Great face for radio.
Yeah,
that's what I thought.
At least you still have hair.
Well, look at everybody. Welcome to This Week in Lumber with Greg Riley and Matt Beamer. We've got a distinguished guest, Brian Wesbury, chief economist from First Trust. He'll be jumping in a few minutes. He's in the back room. I wanted to first of all go over and just introduce everybody again. Matt Beamer, Hampton Lumber Sales. Greg Riley, Sitka USA. We do this show once a week to go over the economics in the lumber industry, what's going on in the spot market, kind of look at a closer view to what the blocking and tackling is going on, and then kind of prognosticate or talk about what we're seeing out there and what we're seeing laying on the table as far as chips. So Matt, let's kick it off to you first and talk about what's going on right now in the cash market. I know we had decent housing data, which we will talk about with Brian, and Greg and I were talking a little bit this morning. It looks like we kind of found a level to trade at here.
Yeah, I feel like, in the last 2 weeks, studs have kind of bottomed out. That was the first thing that I noticed that was changing. 9-footers were the ones. 2x4 9s are kind of the bellwether these days, right? So that was the first thing to fall, and it fell, $300 to $400 to find orders, but they found orders. And then this week, I would say starting like last Thursday, Friday, that it seems like the dimensional side of things is starting to catch a bit of a gear now. And so what I've noticed in trading the last 72 hours is it's almost all 2x4. Basically what people want to talk about is 2x4, 2x4, 2x4. There's a little bit of 2x6 being sold and covered, but most of the interest that I'm getting from speculators or from people that actually need lumber in their inventory is 2x4 related. And 14s and 16s have become really tight again. So I think the euro thing, with the Ukraine, maybe some of the euro import, it doesn't seem like it's flooding the zone like it has in past markets where we get overwhelmed with euro 16s and they become sort of less valuable. Not right now. Seems like everybody's still looking for 16s. I just keep getting inquiry every single day, 2x4 16s, any grade, basically. So I think that's a good length right now. And the mills have been struggling to move 12s. That seems to be the one length in 2x4 that everybody has, but even those are starting to get, scarcer. Things are starting to move up. Futures bouncing off of a 830 low has kind of helped a little bit here also.
Yeah, right on, Greg. What are you seeing in the market after the starts data came out and we kind of traded off for a few weeks?
Yeah, I mean, just following up on Matt's Matt's comments. You had a sense. We did a poll last week, and 60% of the market felt that 60% of the respondents felt that the market was going to bounce in the next 2 weeks, and they appear to be the spot on right now. There was a sense there was a lot of distribution pipeline had been drained. There was a lot of short orders out there. I talked to a couple of mills in the last day or two in the East, and a disproportionate number of their orders have been kind of the wholesale short covering / covering forward business. The only thing I'd bring up, Matt, on euro is that what we're starting to see is there's a big disconnect between what people are willing to pay for Canadian SPF / US species and euro in particular markets. And
you can explain that.
So Mike brought up a good point.
I understand why that is.
What's the big spread? What's the big spread between southern pine and spruce? So let's look like 2x6s, 2x4 16s. I mean, there's a damn near $400 or $500 spread.
Yeah, no, absolutely. Well, if we just want to talk about Canadian SPF versus the euro,
gotcha.
It's heavily dominated by people with trust applications. But there's markets now, and also some multifamily business. But then there's other markets that that guys have come into the conclusion is, hey, I just don't want to mix, and my customer base is primarily wants Canadian SPF, and so that's what they're going with. It is what it is.
It's an interesting point. We've got a buyer in Iowa that we were shipping all kinds of Euro to, and right now he doesn't want Euro, wants Canadian SPF. This is recent in the last month. I don't know what it is. I need to dig a little deeper on that and find out what the reason is, but literally loved it, now doesn't want it, wants Canadian SPF.
I think there's some confusion as to people's thoughts on the strength rating of European spruce. And,
you're right. Most of it is driven by imperfect information.
Right. I don't think it's actually accurate, but I do think that there's some people out there that, you remember about 8 months ago, there was some big brouhaha in North Carolina. A building inspector red flagged some jobs over some Euro spruce, and maybe there's fallout from that, but it's ridiculous, honestly, if you think about it. I mean, we could go on and on and on about that, but there's some information out there that I think is clouding people's judgment.
We can circle around that, but hey, Ash, is it all right? Can we bring Brian in?
Yeah, why don't you introduce Brian, since you guys have known each other for such a long time, and we're excited to have him on.
Yeah.
Is he there?
I should be here.
Brian is tied.
I hear you. I don't see you yet.
I do not. There we
There you
go.
go, Brian. We got you.
What? Hey,
However,
I got you. I see you.
all right. Yep, that's good.
Oh, well, listen, really excited, Brian. Thanks so much for being available. I know that, you got a busy schedule. You got a TV on, and you're on TV in about 45 minutes, I think. But tell me, before we get going, talk about, God, that wood on your ceiling looks fantastic.
We got a real lumberman over there, Brian.
We do.
It's beetle kill.
Yeah.
Yeah.
Outstanding.
Yeah, there you go. That's pretty cool. I don't know why my other camera isn't working now, but what the heck? We tested it before, and we had the good camera. But anyway, hi, Greg and Ashley. And it's great, Matt. Great to be with you guys.
Yeah.
Housing starts came out yesterday, Brian. Maybe you could give us a little bit of your take on the numbers and the implications moving forward.
Yeah, well, you guys are in this market all the time, so in a sense, what's going on out there. But maybe people don't follow the macro data that closely. Single family starts are down 4.5% from a year ago. Multifamily is up 26%. And one of the key reasons for that is that rents in the past year are up 16, 17% on top of 15% the year before. And with people, in a sense, kind of getting priced out of new homes and because of higher interest rates and rising prices, I think builders are going more to rentals, multifamily structures, and I think we clearly see that. There are a couple of parts of the housing starts number that I found fascinating, and that is that the number of homes that are authorized but not yet under construction, it's at a record level. We started that series in 1999. We've never seen anything like this before. And at the same time, there are a record number of homes under construction right now. So, I go back to 2007, 2008. We obviously had a crash in the housing market. We need 1.5 million starts a year to keep up with population growth and all the reasons for teardowns and storms and fires and all of those kinds of things. And we have not had 1.5 million starts until just the last couple of years, just the last 18 months. And so we have a lot of inventory that doesn't exist today because we just didn't build enough for a decade. And so here we are. I still think there's a shortage of housing. There's only two ways to fix that: build more or move more people into each house. And with millennials now, the largest generation ever in the history of the United States. By the way, 50% of new mortgages went to millennials last month. What we're seeing is, I think those age people want to start families or moving into houses. And so the demand is there. The question is, what about affordability and what about inventory?
Brian is, I mean, you and I have known each other for a long time, and we can be a little bit of an echo chamber together. But I mean, for the other listeners, viewers, it's always awesome because you're able to look at the positive on everything. One of the things that people in our industry are, there's angst about in home building in general is the rise in mortgage rates and what that's going to mean to home sales. I saw existing home sales came out today, and they were down lowest levels since I think June of 2020.
Right.
What's your thought? What's your thought on interest rates for the rest of the year?
We're at the 10-year treasuries now really close to 3%. That's above my forecast from the beginning of the year. I thought 2.5%, 2 3/4. Clearly now at 3%. I think we're going to probably go higher. 30-year mortgages are 5% or above. I think they're going to stay there. And then the question is, you asked it, what does that do? I'm going to say this from the sales side of the bond world. All right. During the 30, 40-year rally in the bond market, that people who bought, let's say, municipal bonds, they would say yields are below 7%. I'm not touching anything until it goes back above 7. And then it would go to 6.95 and 6.94 and 6.93. And then finally they go, well, okay, nothing below 6.5. And then they go nothing below 6, and then nothing below 5.5, and nothing below 5. And that kept going on for 30 years. So I think it's the same thing in reverse when it comes to mortgages. So people go, I'll never do a mortgage at 5% above, and then it go, or 5% or above, and then it goes to 5.25. And they go, well, okay, 5.25, but nothing higher. And so there's some sticker shock at first. There's some indigestion when rates go up. But when house prices are going up somewhere between 5 and 10% a year, a 5% mortgage has a 0% real interest rate. So right now at 5%, I think we're going to see some sticker shock affect the market, but I don't believe it's going to blow the market up as we move into the rest of this year. Existing home sales probably will be a little weak. I think construction will be really strong. New home sales, other than apartments and condos and townhomes, I think are going to be a little weak. But the bottom line is, I think we'll recover from this as people realize that interest rates aren't high relative to inflation.
Okay. Hey, Greg and Brian, I wanted to bring up that new residential construction chart just to show maybe a graphic of how wide that permit versus actual homes under construction is. And I know, Greg, you and I always have this conversation during this. If you just look at, obviously, that
the green line is housing completions.
Completions,
right?
Completions. Yeah. And how do we continue to go along this path for basically since, well, this chart was up here between 1.2 and 1.3, and permits and starts keep increasing? What's going to give here to close that gap, or is that gap going to continue to widen a little bit?
Yeah, I mean, that's a question that I keep asking, is that how is that going to resolve itself? I mean, we can talk a little bit. I mean, the reason why completions are staying stubborn is because of all the supply chain issues. Yep. And maybe Brian can talk a little bit about that. But, I keep looking at this going, something's going to give. And I feel that eventually it's going to be the start and permit numbers have to moderate back towards the completions. Brian, you and I we've talked about some of this supply chain, and you've got some great data about why we have this. And I'm guessing that you don't think it's because of Vladimir Putin.
No, absolutely not. I mean, to me, it's pretty simple. You lock down the economy, keep people from working, then you borrow all this money from your kids and grandkids. and then you spend it today. And what happened is demand went up way faster than supply. And that's where inflation is coming from. And then I look at the housing market, and we have so many forces there. You know them all. Everybody knows them all. But one of the things that happens when the Fed monetizes the debt, in other words, the Treasury is issuing bonds, the Federal Reserve is printing money and buying those bonds, then the Treasury gives that money that's printed to people to spend. What happens is profits go up, stock markets go up, there's all kinds of wealth effect out there. And on top of it, people want to get out of high tax, high lockdown states and move to other states that have less lockdowns and lower taxes. And now we're seeing all kinds of people buy new homes, move, and the demand for housing is up massively, not just because the government is handing out money, but because the Federal Reserve printed all this money. And so one thing to remember about inflation is that it makes room when you print all of this money, it makes room for prices to go up in just about every area of the country. And then, you come back to construction and completions. People were used to, getting paid for not working. And now they have to actually, get sore every day and work instead of just collecting checks from the government. And we're having a really tough transition surviving and recovering from these lockdowns. And so you put all of that together, you end up with charts like that. And it's not surprising to me that the completions line starts falling below the permits and starts line right around the time of the lockdowns. The pandemic and our policy toward it, I think, will go down as one of the biggest mistakes we've ever made.
Here's a little crazy question. I was watching an exchange on Twitter the other day, and one of the big multifamily providers in Texas said that their jobs that were historically taking months to complete all of a sudden have had a surge of labor show up. And I'm wondering if that had, and I started thinking about it, and the way the person put it is it's a job that takes 100 truckloads of lumber. That's a large amount of lumber, as Matt and Greg know. And he goes, historically, over time, we all know the guy we're talking about, Matt and Greg. He goes, historically on these jobs, I would make it would go 4 to 6 months to complete. He goes, we have so much labor on these jobs now. We want all these trucks coming at us in like the next month to do this. Is that any result of everybody coming to the kind of the open border policy right now? Does that make sense, Brian, or is that completely off base? Okay.
No, actually, I would argue that's probably part of it. We have, I don't know the exact number, but I've heard numbers close to 1 million people have come across the border in the last 15, 16 months. And so they go somewhere and they need to work. But I think there's a whole nother factor going on. And I can't prove any of this, but we know initially when the checks were rolling out in 2020 and in 2021, the unfilled jobs in America went to an all-time record level. And then we ended those checks. They still had a few more weeks left. There's the child tax credit checks that were going out as well. But at the same time, the Congress and the president were talking about passing Build Back Better, which was $4.5 trillion of spending. It never really included checks for people. But I believe that the people that don't pay attention to all the dotted I's and crossed T's in Washington, D.C. believed that with the new bill that they hoped to get, that they were going to start getting checks again. And so, I now think people are finally realizing they finally run out of savings. They realize they're not getting any more checks. And now we're seeing a flood of people coming back to the labor force. I wouldn't be shocked if we don't add 5 million jobs in this year in 2022. It's to me. So we have smaller deficits. We have the Fed raising interest rates. Those are headwinds. But the tailwind is that the last 3 to 4 million people that we need to get back to work after the shutdowns, they're going to all come into the market this year.
There's another thing that's going on with the labor pool is these young kids, like my daughter is graduating high school and she's looking at college, right? Well, I mean, if you don't have the financial means to attend college, and the college that you want to go to costs $40, $50, $60, $70,000 a year, but you can get paid $110,000 a year to go be a trucker for Walmart, it's pretty simple math for an 18-year-old kid. And I think a lot of these young kids are realizing, hey, there's some power in being a young person that wants to work, right? They can go out and start making 40, 50 grand right out the gate as an 18-year-old person.
Yep.
I mean, the opportunity if I had that opportunity when I was 18, I wouldn't have gone to college. I would have just gone straight to work.
You would have been a great truck driver too, Matt.
I'm just saying, like, if you're a motivated young person right now, you could get any kind of job you really want, other than maybe like a rocket scientist, But if you want to go be a school teacher in Oregon, they've waived all the requirements for young people to have a teaching certificate because they're desperate to hire school teachers. If you want to go work for the railroad, the BN and the CN and the UP, they would love to hire you. They laid off thousands of people. They can't keep up with traffic. I mean, we have all kinds of problems in this country, and it's due to the labor shortage. We also have all these young people that are now graduating high school, looking at the cost of college, going, well, maybe I should just go work over there at Walmart, or I'll be a manager at the local Red Robin. They're going to pay me $55,000 a year my first year.
Yep.
It's just, that's what's happening now. Is we saw it in housing too. Like, so the demand for housing is created this surge, and now you're starting to see it in labor. Labor is going to fill back in because people are willing to pay more for it.
Yep, I think that's exactly right.
I got a quick question. Somebody just sent me something on a text to ask you, but I think he wanted to know about how we printed so much money. Could you size that up for us again? How much money we've actually printed over the last 2 years?
Yeah, about $4.5 trillion. The M2 measure of money, which is what Milton Friedman said to watch. M2 it's like all deposits in all banks, includes money market accounts, savings accounts, checking accounts, cash. It is up 42% from the bottom in February of 2020. And so if you annualize that, we've had money growth of about 17% a year for the last 2 years. That's back in the 1970s, we only had 13% money growth. So 17% money growth, that's where this inflation is coming from. Yes, we have supply chain problems. Yes, the war in Ukraine and Putin all of that is adding some pressure to prices. And I think, by the way, in the next couple of months, inflation, we might peak at over 9, maybe even close to 10, but I think it'll tail off and we're going to see a little bit of cooling, but we're in a 5% inflation world or more for the next 3 or 4 or 5 years, unless the Fed fixes it. And you look back at history, they don't fix it. They're scared to death to make money too tight, because then that will cause the market to crash and a recession. And so I think I don't care how tough they talk, in the end, they don't have the intestinal fortitude to do what it really takes to fix this inflation.
So how long would you anticipate having negative real interest rates at this point?
Yeah. So let's just say, let's just make up a scenario. Inflation right now, we're 8%. The supply chains kind of get a little bit better. The effects of the war in Eastern Europe don't spread. So now we've got them priced in. And let's say inflation falls to 5%, which I think is pretty aggressive right now. The Fed's only talking about taking the federal funds rate to 2.25. The 10-year already is at 3%, so that's a positive yield curve, even if the Fed's at 2.25. And so I think real rates right now are negative as far as the eye can see. The Federal Reserve, in order to get real rates positive, they would have to take the Fed funds rate to 5.5 in that world I just described. And first of all, inflation's not coming back to 2. That's a pipe dream. And I think they've got to go to about 5 on the short-term rates to get there. And I don't think they have, as I said, the intestinal fortitude to do it.
This is obviously it's great stuff. You know, Brian, you can see I got the W up here behind me. Brian and I back in the day, we spent a lot of time out in the bleachers.
Yes, we did.
Wrigley Field, and one of my favorite Cub players was Poncho Day.
Yep. We all looked up at the board. We're like, who is this pitcher? He wasn't on the lineup. We're like, who is this guy? And he, the Cubs don't have names on the back of their jerseys, and so we're looking at number 31 or whatever he was, and somebody looks back at the scoreboard and it says Poncho Day, and we all start talking about who's Poncho Day. They bring
Where
him
does
up.
this guy come from?
They bring him up from Des Moines, and some guy leans over from the row behind us and goes, "You idiots! It's a Poncho Day tomorrow."
Oh, I bet you tickets weren't $75 in the bleachers at that point either.
No, I think we got in for about $5 or $6.
75-cent beers.
Yeah, we did. Poncho Day.
Brian, thank you so much for being available today. This is like awesome. I mean, Matt, I don't know if you have a takeaway picture, a question for Brian before we got to roll.
Brian, here's my question: what's the best hedge against this inflation that we're all going to be facing? It's basically a giant pay cut for America. So, what's the best hedge against that?
Lumber, of course. No, Matt, you know what? What I've been telling people is to buy a basket of commodities, and lumber's part of that. Oil, precious metals. I wouldn't just go with one. I know it's your business, but move into one. I also like owning the materials companies. In other words, if I can buy a ton of copper or a 10,000 board feet of lumber, why wouldn't I own a manufacturer, a materials company that makes copper or makes lumber? Because then when the price goes up, I'm making 1 million board feet a week or 10,000 tons a week, and I can multiply that. And then finally, industrials, any company with really high fixed assets. So industrial, like if you have to build $1 billion paper mill, it's hard for people to come compete against you, and you built it 5 years ago for that money, and now you get to sell the paper for the inflated money. And then the final one if you think about that fixed cost, I love hotels right now, because if you own a hotel, how much does it cost? And you built it 10 years ago. Whoever's going to try to build one next to you and compete against you has to pay twice as much to put that building up right now.
It's a great point.
And so I think the profits there are going to be really high. So those are ways to protect against inflation.
I've got one question. I was reading today, when Greg and I talked about this. There was a chunk of farmland traded in Illinois this week or last week for $24,000 an acre, right?
Wow.
And I'm very familiar with farmland. I'm sure it's at the high end, but yet you hear all these conspiracy theories how all these people are buying it because of this and that. They're buying it because it's a great asset to own right now. And I'm going to tie that into housing, because I think in our industry, Brian, you always have a way of turning things positive. And our industry always has a way of being afraid of the future, right? We always think that it's not going to be better. And I hear things about, well, I'm bullish right now, but bearish long term. But when I think about you talking about interest rates and the increase in housing value, that's a big thing people don't think about. The other thing that I see is investors buying homes now. I know it's not huge yet, but they're still buying them. They're willing to pay that price because they realize that real return. So I see farmland and houses, and I just want to see what's your feeling? How many homes are we going to build before this cycle is over with?
Yeah, I still think we're going to. Part of the issue actually is how everybody's moving, and we have, Florida, Texas, Idaho, they're booming, and people are moving from downtown Chicago to the suburbs, from New York City and close in there in New Jersey out into the burbs, and so we're just seeing this mass migration, and all of that takes more more homes, more places to live. And with existing homes on the market at such a low level, I mean, we're only at 2 months supply right now. We have to build. And so I do think we will have a recession sometime in 2023 or 2024. Either that or we're going to have a lot higher inflation, one of the two. And I think it'll be a recession because how much we've messed up our economy, but not this year. It'll happen. Probably my odds go up a lot more in 2024 than they do this year or in 2023. And let me just say one final thing. You know, you mentioned farmland. I am communicating with you guys over Starlink, which is Elon Musk's new satellite system. I'm at my place. This got built in the middle of Colorado. I have no cell phone service, with Verizon or AT&T or Sprint or any of that. 0 bars, nothing, zero, nada. And yet I can talk on the phone from here. I can Skype. I can do video conferences. I'm going to be on Fox Business over this system in about a half an hour from now. And what that means is people can move anywhere. And so maybe we're finally at this place where people aren't all living in big cities, and we see some of the more rural areas of the United States begin to get more populated. And the only way to do that is to build more. And so it's more than just the economy. It's this longer term trend.
Great point you just brought up. And I asked you this before. So Elon Musk buying Twitter.
Yeah.
What do you think?
Yeah, I love it. I love how the fact that everybody's gone nuts about it. And actually that makes me wonder what's going on underneath. Evidently the NSA is like in the back rooms of a lot of these companies, Facebook, Twitter, TikTok. They're gathering data on all of it. I mean, I'm not trying to wear a tinfoil hat here, but my belief is that Twitter is more involved with social scores for people than we all know of, and so they're freaking out because if this is exposed, it takes the lid off of kind of an interesting thing. And again, I'm not trying to wear a tinfoil hat. We all know it happens. You just go online and you just looked at buying a new fishing rod, and now you got fishing rods advertisements everywhere, all over anything you do on the internet. Well, the same thing happens. We know they do social scores. Like I have all these, conservative followers. So they want to know how to slow things down and promote and demote tweets. We know this stuff happens. And I don't think they want the lid blown off of it. And I think that's why they're reacting so negatively. Otherwise, this is just a normal business transaction.
Hey, we can't have free speech on our free speech platform. That would be against,
Well, the crazy thing is,
good taste.
No matter what people think of Twitter, it changes minds and can sometimes set the public opinion on things, right? So it's a powerful tool.
You expect that you're going to get censored news when you're in China and Russia. You kind of like have an expectation that it's not going to be censored here. But the reality now is that we can see is that speech is widely censored here. And it's not just on Twitter or Facebook. Yep. It's everywhere.
I mean, we're self-censoring also. Don't forget that. I mean, part of the social lubrication just to go along and get along is to not say outrageous things. And our generation, people our age, are probably a little bit more rebellious than my children. My children, they don't want to offend anyone like that. Right. That seems to be the education they've gotten in their public schooling or their grade school years so far, is just don't say anything that offends anyone. Whereas we were looking to offend people, 30 years ago.
I told my little kids that I'm not a rule follower. And I said, no, I'm
Generation X, man. We were just the worst. We were always just pissing everybody off and saying the wrong things and not showing up for work on time. How did we get here?
Right. Yeah, exactly. Well, one of the things that I always try to tell my kids is that talking is thinking. And if you're not allowed to talk, there's no thinking going on. Right. And so, talking is really, really important, even if it pushes somebody else's buttons.
What did Elon say? Free speech is letting somebody you don't like say something you don't like.
Right. Exactly.
Right. Exactly.
Yeah.
Absolutely.
Well, this is absolutely awesome, Brian. I know we got a date with Mr. Green coming up that we're really looking forward to.
Absolutely, can't wait, Grego.
Sounds good, Brian. Thank you so much, Matt and Greg.
thank you,
Appreciate everybody watching Lunch with Lumbermen. Sign in tomorrow. We have another show with Matt Lehman, This Week in Lumber, and we'll look forward to seeing you on this show next Wednesday also. All right,
guys.
everybody.
Take care.
Thanks, Brian. Good seeing you.
Yep. Good seeing you, Matt.